Welcome to Markets Now. I'm Michelle Rourke with Scott Barlick of Quema Varlick. Kind of a quiet morning here over in the grains. We're seeing some mixed action with the livestock futures. Cattle seeing a little pressure. Hogs are trying to recover. But Scott, let's talk about the wild ride that we had yesterday with a 90-day delay on tariffs. Stock market took off. Cattle tried to follow. We're just not seeing follow through on either this morning, are we?
Yeah, thanks for having me. And it's pretty unreal, what we've seen here and how correlated we are to the stock market. Stats we're seeing. I mean, live cattle are very much following the stock market here over the last 10 days. And I had read that there's only one market that's following it more closely, and that's the crude oil. So just to put that in perspective, that we're at the mercy of Dow Jones and S&Ps right now, and the sharp turnaround yesterday. Just had people dancing. I mean, we were so sharply lower that I think there was plenty of liquidation from the long side, only to have it turn around, and then you have shorts that are pressured and blowing out from the top side, and then the spreads were all changing. So we saw all three sectors, shorts, longs, spreads, having trouble yesterday. So that Yosemite Sam shooting his guns, at the ground, making Bugs Bunny dance. That's what we saw yesterday, and it's not over yet, so it still feels like we're in it for a little bit more of a ride here yet.
Yeah, I was going to say the volatility is going to continue. The tariff war isn't necessarily over. I thought it's been interesting to see as well that the market is kind of shook off the trade war escalating with China here. That's not over either.
Yeah, I think that's a great point, that it's not over yet. I mean, it was good news that we delayed the tariffs 90 days. We saw what it does to the market, but what has happened to these markets here over the last, week here with these tariffs has been pretty devastating. And I think if we're looking at it from that, that bigger picture, I mean, you saw the bond market tanking so fast. I think it's just other countries unloading our debt, to where that started to get a little spooky on the economy front. So I think we were probably up against a wall to where it's time to do something there. And as far as it just being China left in the bullseye, I guess they've really shifted a lot of how they do, their business anyway, buying a lot of soybeans from Brazil, buying a lot of, their own pork supply is pretty big. So they're the ones that's left that we're really fighting for now. And it is just a delay, just a 90-day delay. So are we going to have to do this all again? I mean, is this the new normal? We just kind of circle back and forth for, another 3 months down the road. Are we going to be in the same boat, fighting all of this again? So just hoping we can get some resolution out of this, but a lot of uncertainty still looming. And if you're going to, take a hedge position or looking at, some kind of protection, you better have your plan in place and know that it could move against you, it could move for you. We're not sure. So you got to be, a little bit more sure and dialed in on where you want to be with your trades right now.
Yeah, absolutely. The one thing it did kind of at least delay is this talk about this global recession and the impact that could have on protein demand. So hopefully that will help stabilize the protein sector a little bit. Let's talk about some of the fundamentals, not like we're trading them really, but cash trade. What do we know about cash this week, and where do you see most of it falling?
So I think we've got, some producers that have turned into more willing sellers. We see markets like this. We've got a packer that wants cattle. We've got demand that is still good. And there's a lot of money on the table here for these producers. So, these $400 a head closeouts, $500 a head, maybe they're just $300. That's big money. So if you could get that 208 yesterday, which quite a few guys were getting bid at, and I said, I don't know why you're not taking it. I mean, it's kind of, I would want to get them gone. We're kind of in that attitude, personally for me to say, hey, let's cash in. We had a good run. There's way too much risk on the table right now for me to feel comfortable. As we talk, all of us brokers, I don't think any of us are sleeping at night anymore. So, I mean, it's just that kind of nerve. So that 208 trade was nice to see. Gave some guys an opportunity to, to get some cattle moved. And now the tough thing is okay, if you got cattle ready 30 days out, we're in such a good time frame, you're more willing to try to get them sold. I think you're looking for some prices. You're going to start entertaining, contracts that you've never entertained before. But you do have a packer that wants to make sure we have weight on them because we have such tighter numbers that if we get current, that just puts them back in trouble again. So we're going to have a little bit of a, fighting there. Oddly enough, it might be a producer that wants to get cattle moved quicker. And a packer that's not going to be willing to lock them up, too soon. They're going to want some more weight on them. So demand is still good now. Maybe that's going to change. I mean, we got a market that's changing by the minute, and that's part of the uncertainty. How healthy is the consumer right now? Are they doing okay? Are they weathering the storm? Are we still going to be going out to eat for a steak, or are we going to hunker down for a little bit?
Yeah, that's definitely important. I don't know what to say about the hog market because obviously there's some trade considerations there, but what is the hog market even trading right now? Or is it just about money flow there like it is in the cattle?
A lot of money flow. We see those open interests just go sucking down as traders are looking to just get out and get neutral because you're not sure what position to take. And that's hogs too. I mean, we were trading this range nicely with, unable to rally on the bullish fundamentals, the tighter numbers, and maybe some decent news that Mexico's doing okay and still buying some pork, but then you still got tariff wars, so that's where can't rally on the good supply to demand kind of news. We're still worried about the tariffs, unaware of where to go, and that's still what's wrapped up in that market. So I think everybody just kind of pulled away and said, hey, I don't know if I even know where I want to stand right now. So we see these intraday moves that are getting pretty wild. If things would just settle down, I think the hogs can recover. Get them below $90. That's getting to be cheap enough for me to say I think we have fundamentals that can get us back to $1. But the uncertainty is just not letting it happen right away.
Yeah. Weekly exports weren't horrible this morning, but certainly not where we would like to be. The big thing you and I have talked about before is just the fact that at least we've got our number one customer, Mexico, which is USMCA compliant. That seems to be at least holding the market together somewhat, isn't it?
Yeah, I think that's exactly right. We're getting along with Mexico a little bit more. We move a lot of pork there, a number one customer there, and you've got them taking a lot of corn as well. So that's the one thing. It seems like they've been one that's been willing to say, hey, let's work together. Let's get this done. And I think that's very important. We need all the friends we can get probably right now. And so that's helpful. That's what's been holding a little bit of a floor here.
Yeah, and we've been, at least I think, a little resilient here to the fact that we've got this China trade war escalating, but they're not that big of a percent of our market anymore, are they?
They're pretty self-sufficient. I mean, they've got apartment buildings full of their own hogs, and that's how they've been building over the last 5 years to 8 years, probably more like the 6-year time frame. But they're set up. They're trying to be more self-sufficient with the hogs and how they're doing it. So they haven't needed us that much. Nothing like they used to. They were such a big part of the hog market. When China was buying hogs, they really reacted, and over the last several years, they haven't been that big of a part of it. So that's why the sting isn't quite so bad here with the China trade war on the hogs.
Yeah, and I think soybeans really handled the trade war, the escalation with China very well yesterday, because this is basically, it's a new crop argument. But this morning we're not, the market's back and forth here a little bit. We're not seeing a lot of follow through off of the rally yesterday. Are we just squaring up here ahead of the report coming up this morning?
Yeah, grains held together better than I probably expected them to during all of this back and forth action that we've seen on some of the other markets. So soybeans holding, from the crash that it had, and maybe we are trying to turn that page to say, hey, we didn't get the acres on soybeans that we needed. And yeah, China's turning towards Brazil anyway, for the most part on their soybeans, with them being the top dog anyway. So maybe we can kind of put some of that to rest just a little bit and try to look ahead. So I mean, I think we're all hopeful that that's what we're starting to trade now. That we can look at what we're planting in the ground and talk about some weather and what our acres are. I think we're excited to do that. But for now, they're trading okay. I think the demand has held together better than expected here through this, and it could be okay for the foreseeable future here until we decide what kind of weather we're looking at and crop that we're looking at.
That's right. We're not going to deal on the report with new crop. This is all going to be old crop today. Do you expect any changes, maybe even in corn ending stocks here? Is that the one we're kind of looking for a little change in the WASDE?
Yeah, and I'm not expecting any major changes or basically major movement from this report here. So I
Me
kind of
either.
think I think should go off without a hitch. I think it's the outside markets that are going to be what we're trading. I'm not even sure the report's going to have much action. We're too focused on what's going on with the tariff war, with the stock market, that's going to be the number one thing that we're trading today.
Yeah, no doubt. All right. Thanks so much, Scott Varlick with Quima Varlick. That is Markets Now.